At the top of the hour, we told you about the stock market's nosedive today. The Dow alone dropped more than 1,000 points. And joining us for an in-depth look at what this means for you is financial advisor Dennis Brewster. Dennis, thanks for being here.
Oh, you're welcome, Lindsay. Thanks for having me.
So we've watched this over just the past few days. The stock market extremely volatile, up yesterday, way down today. What should people keep in mind as they see this roller coaster?
Well, I think that, that's really the key, what you mentioned. You don't want to get too sucked up into the short-term volatility. Don't extrapolate bad market environments when you're in the middle of a crisis like this. And I think that's the biggest challenge for most individuals. It's hard not to, but you have to keep it in perspective. Well, we've been through many interest rate cycles before, and we ultimately come out the other side, and we'll get through this one as well.
Now, should people actually embrace this volatility? Is there an upside to it?
Well, there isn't. I mean, it's hard to feel a silver lining when you're in the middle of a difficult environment like we are now. But for somebody, say, like yourself, that's younger and you're probably adding to your 401k for your future, that gives you an opportunity to add at much lower prices. So you're able to take advantage of it. Somebody that's in retirement, they've probably got a little bit of a different outlook and maybe have to be a little more careful. But, declining markets give other people an opportunity. And when you look at the last 2 years, how much the markets had gone up, we had been due for a breather. And, and we're seeing it. It's not fun when you're in the middle of it, but they're part of the process and a necessary part of the longer term environment.
This drop comes a day after the Fed raised interest rates to hopefully curb inflation. Does that usually play out that way for people who don't quite remember or don't understand how it works?
It does. The interest rate cycles are always difficult, and the balancing act for the Fed, they know that they've got to get this inflation under control. There's no two ways around that, and that's their goal right now. The tough part is there's no perfect answers, and it takes a little bit of a balancing act. They're trying to get inflation under control and at the same time not trying to cause a recession. They'll figure it out. They've done it before, and they're more than competent to handle it. But it's a bumpy process, and it's not easy, and we're kind of seeing that firsthand. And I think most people should probably expect a little more volatility going forward as we kind of work our way out of the issues that we created the last couple of years.
Dennis, best single piece of, I guess, generic advice for people who might be watching, because everybody's in a different financial situation, but what would be your takeaway?
My takeaway would be don't extrapolate, this bad environment into, the next millennium. Down markets are part of the process. It always seems longer when you're in the middle of one and always seems a lot harder. But keep your sights on the longer term view in terms of where you're going, because 10 years from now, we'll hardly even remember this. So keep your sights long term, keep your focus longer term, and don't get caught up in, all the negativity right now.
All right, great advice. Thank you so much, financial advisor Dennis Brewster, for being with us.
Okay, thank you, Lindsay.